Hey, what's up, guys? Houston here. I'm going to tell you 4 loans, okay? 4 that are the easiest loans that anybody can get, okay? And the reason they're able to get them is because these loans are not looking at the personal credit. They're not going to do a credit check. They don't care how bad your credit is, okay? Now, that being said, please understand, these here are the easiest. Plus, I have some other lenders that you may want to take a look at because I think they will give you leeway once you get qualified for those loans as well for leverage. All right. Now, the first one, you're talking about asset-based loans. All right. And so with your asset-based loans, those are your loans. It's like when you have art, when you have like physical silver, physical gold and stuff like that, you can actually use those as collateral for asset-based loan. All right. So it doesn't care about your credit score. It has nothing to do with that. You know, you may have a piece of land or house or something like that. Those are asset-based type of loans. All right. Number 2. Okay. So with number 2, you have your margin loans, okay? Now, many of you may have heard me say this. A margin loan is where you would have money invested into the stock market, okay? And as your stock portfolio goes up, it has to be at least $2,000 or more, okay? And you have to also opt in for this here as well. But it has nothing to do with your credit. And they're not going to do a credit check. It has nothing to do with that. This is all about your stock portfolio. It's a margin loan. This is why people get mad and they say, well, the rich is getting richer. Well, the thing about it, the rich don't pay any taxes. The reason is that they have the dirty secret of they just use their portfolio to be able to borrow against, okay? And at some point, it may become risky. It just depends on how the market turns, right? However, they don't have to worry about that credit. That's the reason they said the rich don't have to worry about their credit. They don't have to worry about their credit because long as they're invested in the market and they have a strong portfolio, they can do a margin loan against their portfolio, usually up to 50%. Some lenders, they may even go as high as 60%. But this is the second loan that's the easiest for people to get. Now, the next one is with the insurance. That's right, life insurance. I know you guys hear a lot of people talk about IULs and becoming your own bank and stuff by overfunding your life insurance, right? The thing about it, there is quite a few companies out there that would allow you to do this, okay? So you have like mutual trusts. Their interest rates is only 4%. Now, that's also very important because when you're using asset-based loans or margin loans or insurance loans, their interest rates is so much more lower than what you would get from your traditional bank or credit union, okay? This is how they're actually leveraging. So you're actually being able to keep more of your money, all right? And you, with these type of loans, you don't have to expedite paying them back, okay? You pay them back at your own leisure. Like I said, the interest rates on these here loans is like very low. Now, the good part about insurance loans is that those type of loans, they actually will pay a dividend. Certain type of loans will insurance loans pay a dividend. Okay, like I was telling you, mutual trust, their interest rates is 4%. You have National Life, their interest rates is 5%. Then you have Mass Mutual. Okay, so Mass Mutual is between 5 and 6%, but they actually pay a dividend. So while you're borrowing money, you're still getting paid a dividend on your money. Then you have Penn Mutual. Penn Mutual, they pay a dividend as well. And you also have Lafayette Life. They also pay a dividend. All right. So thing about it is where you're thinking like, oh, I can't get any money. Oh, I can't get any money. It isn't that you can't get any money because you have bad credit. You just never positioned yourself to be able to get any money. Now, the last one and the easiest one, this is for anybody. If you're working a job, this is the easiest loan you can get, and it has no interest. The other one have very low interest. This one has no interest. Okay, and that one's with your going to your HR department and filing that W-4. Okay, so when you file that W-4, all right, you're gonna file it as exempt, and I usually tell people do this for at least 3 to 4 months. Okay, and the reason is you'll bring home your full paycheck, and you can use your full paycheck to actually start paying down your debt. Okay, that's the reason why these are the type of loans you actually want to focus on, because you're being able to keep more money in your pocket. All right. Now, some of the better places to get a loan is when you're a member with a credit union, because credit unions, they have more flexibility. So long as you've been with them for at least 60, I usually tell people from 60 to 90 days is usually that fine line for credit unions to give you a loan with no credit check and bad credit. You know, it just depends on the type of product as well. So looking at the DOC Federal Credit Union, okay? Just remember DOC Federal Credit Union. Now, in reference to bad credit loans, 60 days for a $2,000 loan. For to get a $5,000 loan, they want you to be with them for at least 6 months. They also offer Christmas loans up to $6,000, and I think the interest rate starts at about 9%. Okay, so they do offer regular personal loans as well. Okay, so it all depends on the relationship. All right, now another credit union, and the reason I like this credit union is because when you take out a loan with them, you do not have to start paying that loan back for the first 90 days. All right. So imagine somebody giving you $35,000, $40,000 and say, oh, you don't have to make your first payment for the next 90 days. And if you're doing it right, you're actually able to invest that money the right way to where that money can actually start paying back that loan on its own. Or what you could do is if they give you a $40,000 loan, okay, you find out, say, okay, how much is my monthly payments? And you take that amount, subtract that amount for up to a whole year and put that into a checking account and put it on automatic, okay? So that way you don't miss any payments. Because you put it on automatic, this positions you to be able to qualify for more funding. By the way, with the credit unions, when you apply for a personal loan, you also can double, sometimes triple dip, and get a credit card as well as a line of credit. Okay, so that's also an option for you as well. All right, so the other one is a Truliant Credit Union. All right. You do not have to make a payment with Truliant for the first 90 days. So that's one of the great ones about it. Then you have Centric Credit Union. They will go 90 days with no payment as well. All right. Now, you also have a Congressional Federal Credit Union. Now, with Congressional Federal Credit Union, they'll do 60 days. All right. Now, you also have DCU, Digital Credit Union. Digital Credit Union, they will do 60 days as well. All right. And the last one on the list, when you're trying to get a personal loan and you need that extra time to make payments and stuff like that, is with Liberty Federal Credit Union. They will do 90 days. All right. So I hope this video is something that's inspiring to help you. If you like my content, I appreciate it if you all share my content, subscribe to the channel. Make sure you hit that bell, because sometimes YouTube would turn off that bell. And a lot of times when I launch videos and stuff, you may not be aware that that content is out there. So I hope this video helped you. If you have any questions, you can schedule a call by clicking the link in the description. Thank you.